Hello. Now, financial services marketing is an industry like few others. People that work in this sector know better than most the impact the rules and regulations can have on what's possible in marketing. There's a constant pressure to play things safe, stay conservative, and above all, avoid punishment by regulators. But we don't have to be beaten into ineffective content by the rules. We just need to accept what we have and up our creative game. Now, video marketing doesn't escape the restrictions of legislation, but it certainly helps overcome them. And both for B2B and DTC services, it's becoming increasingly important in the marketing mix. That's why for the next 14 minutes, I'm going to be focusing on how financial brands can use video to build trust with consumers, how to plan long term, and how all of that can be done in a highly regulated world. On top of regulations, financial services face a pretty cynical public. During and after the 2008 financial crisis, the banking industry was made out as freewheeling, reckless, and culpable. And in 2016, 92% of millennials didn't trust banks. Now, those residual trust issues do exist, but there are, however, two bits of good news to look at. Firstly, financial services and fintech happens to be home to some of the most creative marketers in the world. I meet people from all sectors, and it's always the people that work in this industry that show the capacity to think around blockers, to overcome negative sentiments, and to sell highly emotionally charged products like pensions and mortgages. The second bit of good news is that there is a real opportunity at the moment for brands to make a positive impact on the market. COVID-19 has been a horrid experience for all of us, and we must never forget the toll that it's taken. However, it does also represent an opportunity for financial institutions to prove their trustworthiness and indeed to be helpful to customers and businesses alike. But before we get going, let's get into a really quick intro to me so you know that I know what I'm talking about. I'm MD at Hurricane, which is a highly experienced video marketing agency that helps brands to create content that's actually worth watching. We do strategic planning to fit video into the marketing stack, and we create content from national TV commercials to brand promos and online events. I've written a book called Video Marketing Strategy and now have an online course that is imaginatively called Video Marketing Strategy. So basically I'm a total marketing nerd there. In financial services, I work with marketing teams at a range of fintech brands and high street names, from people like MoneyHub and Credit Call to Barclaycard and AXA. Okay, so that's enough about me. Let's get back into some content, building trust and standing out in the market. The journey starts with taking a step back and looking at the challenges of time. This industry relies on the trust of its customers, which takes time to earn and lots of effort to keep. Add to that some of the longest sales cycles around, and it's easy to see that financial services marketers are playing a really long game. An elongated user journey means that real success is found by firms that position themselves as industry leaders who can be counted on when times are good and bad. It means that brands have to serve content to audiences on a regular basis, and it means being consistent with messages that are responsive to the world around them. It's because of this that I'll be putting short horizon advertising to one side today and focusing on long-term content marketing. To understand how video can work over months and years to build a brand, there are two key models that I like to work with. The first is a very simple digital sales model that many of you will be familiar with, and the second is a content model that I call HHHG. So let's start with the quick one. This is the traditional sales funnel for a customer's journey. Mass media lands huge amount of eyeballs at the top of the funnel, millions if you're talking about TV commercials. And over time, these leads are whittled down, conversations are had, and a prospect arrives at the end of the funnel as a sale. This model, however, is pretty much dead on its knees. The digital world just doesn't work this way. Instead, we have a new funnel shape. The top of the funnel is now narrow as we can add fewer but more targeted leads. The content we put out here is not only paid placements that push unwanted into people's social feeds, but search-focused content that draws people to our brand. Here we can expect to use short, ultra-short even form films, 15-second Instagram ads, short-form banner videos, 30-second how-to films, and more. Once brands have people's attention, they need to hold it by acting like a publisher. Now, content must earn its place in customers' lives and form an ongoing conversation between brand and consumer. This stage of the funnel is vital in turning a prospect's interests into a genuine intention to purchase. Durations in this stage of the funnel creep up. Most will peak at about the 4-minute mark, but really engaged viewers will stay for 10, even 20 minutes for the right content. Once a customer has heard everything they need to know, they are ready to buy. And it's up to brands to switch mode again, this time to being a salesperson. And this is where video content must make big conversions. Big calls to action, clear messaging, and short, punchy price drivers are super vital here. Post-sale, brands need to retain and grow customers, obviously, and where possible, building their total lifetime value. And here, variety is what matters. A combination of attention-grabbing awareness films and useful mid-funnel content is what is going to work well for you. And there you have it. It's a model whose principles you'll be no doubt very familiar with. But it is good to get ourselves aligned, as awareness, consideration, conversion, and retention are vital in the language of video marketing. The digital sales funnel helps us to visualize how we will use video across a customer's journey. But there are so many kinds of content. Is there something to help us consider what will work best at each stage? Well, unsurprisingly, yes, there is. My HHHG model. It's based on the YouTube model of Hero, Hub, and Hygiene, but I've updated it and refocused it so it's more relevant for the financial sector. Hero content is the name given to big set pieces that drive overall brand awareness with people that have not engaged with a brand before. The content tends to be bold and emotional, and it's pushed to a wide audience. Hero isn't content that the audience is looking for, and just like a traditional advert, it is activated using paid placements, online influencers, and PR. With very few exceptions, hero content sits at the awareness end of the funnel. Examples of hero content are all around us, but here is a standout example created for PwC by Philip Nilsson that tackles the issue of trust in financial services head-on. While hero content is busy spending the budgets and shouting from the rooftops, hub films are quietly getting on with things behind the scenes. This regular content is aimed at people that are already familiar with your brand, and it encourages them to engage. Hub films ensure social channels have a regular supply of fresh, engaging content that explains who you are, how you think, and your perspective on the world. Hub content typically sits in the consideration phase of the funnel, but as it is so highly searchable, it can actually cross into awareness and drive organic traffic for your brand. NatWest do hub content really well, and they nailed it with their series aimed at business tips for small and medium businesses. Next, we move on to help films. YouTube calls this content hygiene, as it's typically used daily, like cleaning one's teeth. But for me, help is a label that more clearly says what the films are actually for. This is subject matter that your audiences are looking for as they have problems to solve or questions to answer, hence the name help content. Again, we can look to NatWest, who have a full catalogue of helpful tutorial videos on their YouTube channel, which cover everything from explaining how to open up an account to connecting with younger audiences with a series of videos that explain money matters to kids. Finally, we need to understand the form and purpose of Go content. These are simple executions that focus on driving one specific action. They may be served to people via retargeted paid placements or sit at the bottom of the funnel to be activated by email or social, but they are always focused on measurable KPIs. Here's a Go film created by Starling Bank again that uses money-saving drivers to encourage a click-through to purchase. Now for me, the CTA isn't strong enough on this, but it did sit in the copy around the film, so it did work well enough. Now that we understand the model of how content can be served across the sales funnel to accommodate the long lead times of sales in financial services, we can start to look at the idea of emotional drivers. Which levers can you pull to resonate with viewers at an emotional level? What are their hopes and fears and their goals in life, both public and private? When I'm running workshops around this, I ask brands to think of the things that will make their customers care about, or indeed want what they want from their product. We start with optimistic, the things that you would hope your customers care about. These might be saving the planet, making the world better, delivering a better service, all those kind of things. Next, I ask them to be a little more cynical in what benefits they think their customers want. And now, for example, we might want to look to things like they want their boss to give them a promotion, they might want just an easy life, or they may just need to keep their job. It's fairly common at financial services events where I'm talking about emotional drivers like this for me to be challenged by someone that says there is simply no emotion to be had in the product they sell. It's too dry, it's too functional, it's just too well dull. And to these people, I have to politely say, you are wrong. There is always something that we can hang our emotional messages onto. And to prove this, I'd like to show this video created by Thalia. Now, meaning no respect to Thalia, their product is insanely dull by any standards, unless you get really excited about electronic invoicing, of course. But they've still found an emotional driver to engage people, and they're having some tongue-in-cheek fun along the way.
When you don't invoice electronically, you spend time manually inputting your invoices. When you spend time manually inputting your invoices, you get a repetitive stress injury. When you get a repetitive stress injury, you ask for time off work. When you ask for time off work, the intern fills in. When the intern fills in, he does a better job than you. When he does a better job than you, he gets offered a job. And when he gets offered a job, he becomes your boss. Don't let the intern become your boss. Allow suppliers to submit free electronic invoices through Thalia.
Explaining to you the ways that we can find emotional drivers for a video is a whole session in itself, but my main tips are: 1, that if in doubt, aim to grow trust, and 2, you can never be sure what will work, so A/B test things and you will be surprised by the results. At Hurricane, we made a video for Hargreaves Lansdown. It was an investment app that gave insights about buying and selling decisions. Now, we had 2 potential motivators to test which came out of the initial sessions. One was that the app gave you great insight to make better decisions. The other motivator was that the app was just really cool. It felt great to use and it made you look good, like you had the best investment tools. Now, we didn't know which would work and A/B tested the results. And the film that got the best results was not the one that promised better results for investors, as we thought might be the case, but it was actually the one that showed off the fact that you would have this best tool and you really knew what you were doing and therefore you should download it. Okay, so up to now we've had a look at some models that help you connect with target audiences over time, and we've looked at how to build an emotional connection. As we have a little time left, let's take a look at a single brand that stands out in the market and see what lessons we can take from them. Mastercard is, of course, a titan in the industry when it comes to creative financial services marketing. They are super well known for their hero content, but they also think in depth. Mastercard offers a wealth of videos that cover a wide range of topics. So to get your head into the ways that video can be used, it's worth looking around Mastercard's video content. You will see a real mix of content across the Hero, Hub, Help and Go model. And you also see that the content is targeted at different emotional drivers. But we can also see something else of real value. Mastercard has moved on from YouTube. Let's take a look at their videos on the channel. Over time, they've had some real winners, but you sort by popularity and you can see that the big successes are from years ago, some as many as 8 years ago. If we sort by recent date, you can see that there are really very few films, and what there is clearly has no paid behind it, as view numbers are low, sometimes only in the hundreds. However, if we jump over to other channels, we can see that Mastercard's Facebook channel is doing really well, their Instagram channel gets lots of love, and we can also see that there is a real push into TikTok. So what we're seeing here is Mastercard successfully identifying where to put their effort in reaching target segments. They're clearly trying to penetrate Gen Z and Gen Y, so the natural place is to be on Insta and TikTok. And what they've not done is to use their existing YouTube channel as a repository of content that doesn't get watched, which is a trap that many other brands fall into, and it just weakens the brand itself. The thing to take from this is not that YouTube is somehow not the right channel for financial services, it's that we have to constantly consider where to put our content. Okay, so there we go, a super whistle-stop tour to get you thinking about video in financial services marketing. My main takeaways are: consider where in the funnel you are targeting customers, think about what their emotional motivators might be, and above all, concentrate on building long-term trust by answering questions and providing solutions when and where people need them. Okay, I'm going to be live in the Q&A shortly, and I love answering questions, so please find me as many challenges as you would like. I'm also going to be posting links to my online course and book, along with discount codes to help you get them through on your learning budget. Thanks for your time. I look forward to hearing from you soon.